Futures are pointing to a lower open amidst uncertainty in Greece, where recent elections have failed to inspire a new government coalition. Earnings are out today from Disney, Tenet Healthcare, and Molson Coors. The markets went into corrective mode late last week. How low will they go? I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. So markets, of course, have been on the defensive since late last week. We had Europe's election results yesterday causing some uncertainty. Investors ultimately did brush off the news, Scott, so will it be possible for them to do so again today?
I think they brushed off the news yesterday just because we went from over 1,400 down to the recent support areas, so I'm not so sure it's going to happen today. You know, as far as the elections are concerned, it feels like the market really liked a unified front against deficits. They liked the fact that austerity would be put in place, but before austerity could even go in place and before the patient could take the medicine that was prescribed, all of a sudden they don't want it. So that's going to create volatility, it's going to create uncertainty, it's going to create the yield game where yields are going to start going. So ultimately the market's going to decide which way Europe needs to go, but for now, it seems like we're in corrective mode. So the question is, how deep do we go and where can we start buying for swing trades, or are we going to continue just trading for cash flow until we see more clarity?
And with that volatility, as you mentioned, what will be the key levels to watch in the S&P?
Well, if you look at the chart, we're coming to those levels right now. We're actually opening very close to them. If you go here, this is where we bounced off yesterday. You know, if you want to take a quick macro look at the chart, we've talked about this uptrend so many times, starting all the way back from October, where finally we breached it right around here. You know, if you remember this upper level floor that took out this area, you know, right when IBD went to correction last time, we came back up, retested those highs somewhat, almost like a double top, so to speak. And then late last week, as a trader, we were talking about 1390, 1392. I had some longs. I was thinking, you know what, as long as we hold this level, I think we'll be okay. But if we break this, you have to have stop losses in. That's why you have them for a reason. So PS broke 1392. I got stopped out of most of my loose longs or my leftover positions. And now look where we are. We're coming right into very big support. Here's the low from April 10th. Here's the double bottom from April 24th. And now or April 23rd. And now we're coming into it again. So from here to here, first time you get a quick little pause, sometimes a bounce. Yesterday was very unconvincing. So if we do close below this 1355, 1357, I think you have 1340, which is a point of reference that a lot of technicians are talking about. So we're going to have to look there. But ultimately, I think this 1320 area is very doable.
And earnings season is coming to a close in the next week. May through July obviously tends to be choppy. So how do we brace for that period?
I would say almost 2/3 of the companies came out and they were very positive. So that supported the U.S. recovery story, but they weren't treated very well by the markets because we also had a big move in the first quarter. So when you have such a big move in the first quarter, you need to digest. So either you digest with downside action or you digest over time. And as of right now, we're still only about 3-4% off the highs. So very, very healthy for a macro investor. I still think maybe we can go down to 6 to 8% off those highs, which would still be considered very healthy. I don't think we're going to get that 20% or 22% summer swoon like we saw last year off the highs, but obviously we'll measure it along the way. What you want to do is you want to keep on the radar the very good earnings, write down those stocks, write down key levels, and put together a wish list, because at some point moving forward, they will be buyable and you'll have great entries and you'll be able to time it like a pro like we try and do.
All right, well, let's check the temperature of a bunch of sectors and see which ones we could look to for possible trades today. Let's start with the Qs. You know, it was stated Thursday, I want to make a note, that the longer the Qs hover at the 50-day moving average, the greater the chance it loses that support. So will we see the Qs test that support anytime soon?
I think that that's a valid point, because it's like you could only sit on the floor so long, and if you don't bounce off of it, typically you break below it. And if you look at the chart of the Qs, you will see yesterday we actually made a lower low and reversed pretty nicely. So if you look at this 2-day pivot right here, this low here was 64.45. Yesterday we went as low as 64.29, reversed up. So traders could use this as a point of reference to trade against. So if you look right here, this is the spot. I ultimately think that, you know, this gap is going to be very hard to, you know, get filled, and if the longer it stays unfilled, the more pressure we're going to have. So I think if we break this area, the buyable zone for the Qs will be coming into this uptrend, which is right around 63. So short term, I think traders will be trading against this low, but once we break and close below this big support, I think that'll be the more compelling area for a macro investor to put on some swing trades, because as you can see from the October low, this would be a retest of that uptrend, which has not been broken, where you've seen that broken in many other sectors.
And retail as a whole has been really strong lately, but what are the real highlights in this sector?
I think it's have and have nots. You've seen some good earnings, you've seen them rewarded, you've seen some of them sold. If you look at the group overall, if you look at the RTHs, you will see it's not even below the 50-day yet. So if you look here, I was talking about this also before I left. I was talking about this upper area, which was intact, and said stay with it as long as it stays intact. And once it broke below it, you had to get out of some of your uncommitted longs. So if you look now at the trend here in RTH, you will see that it's very it seems to have broken a little bit here already. If you go right there, it's hard to match up. Sometimes they're not as symmetrical. If you look here, though, we'll take a quick look at the 50-day. This is an area in the RTHs that I think you have to watch. 41.39 would be big. Yesterday, you did see some stocks go green. You saw Lulu, go green after a move to retest this area. You saw some others, which we'll get into a little bit more later in the program, but I think RTHs is a stronger group versus some of the others.
I think it's interesting to note that financial stocks, obviously, which would be the most sensitive to anything that could rattle the Eurozone, were not only the biggest gainers of the day yesterday, but had the most volume. So how is the XLF shaping up?
It's something that we always watch on big down days, and it's been in corrective mode, but it hasn't been game over there. They've been acting very well still this entire year. It's been very methodical, actually. And if you look here at the XLF, yes, it went green first yesterday, but not, like the RTHs, it's already below the 50-day. The 50-day moving average in this is like 1535, which we are now below. So, it was good yesterday, but on a macro level, it's acting weaker than retail, rightly so, considering a lot of these banks probably have exposure to the Eurozone. But anyway, 1497 to 15 is a very big area. If this area were to hold, I would say the downside action would be pretty muted. If this gives way, you have a really, how many reallys did I say? A lot of reallys. Really big one coming into 1450. So here's level support 1, and this is your major right there around 1450. In
addition to gains in the financials, we also saw home builders shares rise yesterday. So can upside continue there?
That also is above the 50-day. So we just saw retail and the home builders are above the 50 days. So that's showing leadership. So if you look here at the XHB, you will see that again, this too, gave way to this upper area. If you look across, it tried to break out again, but obviously the market couldn't do it on its own, or this group couldn't do it on its own. It's coming in. Right now it's only testing the 10-day. So it has room to the 50-day. I would say if the home builders hold this 2095 area, again, you're going to see a lot of muted downside. If it starts to give way, the major area of this overall, just say, this support / channel would be down here at 20. So watch this area and this area to judge how deep this retracement can go, or correction.
And XLI, however, showed little change yesterday. So how are the industrials shaping up?
The industrials have a lot of overseas exposure, so people are trying to support this story, and I've gone behind it somewhat here and there. But if you look at the chart, you will see that it remains to be seen. If you go to the XLI, you will see that it's already below the 10 and the 50. This small little uptrend that I drew to see if it would hold is now below. It's got some room to go to here, and overall, this is not a gray-looking pattern if it starts to work its way. Here you have somewhat of a head and shoulders pattern. You have the left shoulder, the head, okay, the right shoulder, and then this big neckline going across. So I would say watch this very close. If this XLI can't hold this, what is this number here, just to give you a closer look, this 36 or 35.50 to 36, you could see it move down to the 200-day, and this might be the first group that actually tests, the 200-day, which would not be good. So we'll see if this leads us lower.
And energy stocks have, of course, been the weakest sector. Does the OIH indicate that nothing will change about that trend anytime soon?
The OIH has been methodical to the upside, but it's also been a little, I would say, disappointing / frustrating for guys looking for momentum. There's been really no momentum in this group. Even in the first quarter when it rallied, guys made money holding this group, but you had to be like perfect. And it started to act better a week or so ago with Schlumberger and some of the other guys. But if you look here at the chart of the OIHs, you will see that it came off pretty quick. Okay, so they got sold down very quickly. I would say right now, yesterday you saw a mini reversal. We told this the red dog reversal where it trades below a level, comes back up. But I just think it was oversold considering look where it came from this 42 all the way down to support. I would say it's still hanging around, showing the same character that it has all year. But again, you had a nice move, and if you buy any strength in the OHs, you seem to get hurt. And right now with the commodities under pressure, the market's taking it as a bad thing because some people are involved in commodity stocks. But overall, for the health of the market and the health of the overall markets, lower oil is good. Lower commodity prices is good. Right now, I think we're right around 97 in oil. I think below 85, the consumer will start seeing it more in their pockets, and that'll be a good thing for the markets. I just don't think we get there, but I guess wishful thinking.
Well, yesterday some high beta names acted okay, so we're going to explore high beta tech right after this break. Stay with us.
Hi. I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and we're diving into high beta tech yesterday, starting with Apple, who showed some leadership true to itself yesterday. What do you think about Apple going into today?
I think guys made some quick money buying Apple. It was negative, went positive, and had a big push, and then it dropped $10 and then it closed up $4. So there was volatility. There was ways to make money both ways in that trade. As far as investors, I think they're a bit worried that the action has been a little faulty lately, but overall it's still only about 10% off the highs, which is a normal type correction after an enormous run. Today it's down, I think, a dollar or two, with the futures down 6-7 handles. So I'm going to look to see if I could buy this for cash flow. If you take a quick look at the chart, let's take a look at a few different time frames. If you look here, if you guys remember, this was the bounce back to retest this broken trend line right around 622. Then you had the gap up in earnings and just slowly trickled down. It was a much better sell than a buy during this time period. And then yesterday it turned green before the rest of the market versus this pivot here. This pivot low here is 555. So today, I would say look to see if it shows relative strength. If it does, you buy some. Then if it trades above 572, which was yesterday's high, I know that a lot of guys in my room, including me, will be buying a little bit more. And then let's see ultimately if it could fill this gap. I think that you have an easy bounce if the market wants to, just say maintain composure back to 585, but then right around 585, 587, that'll be the true rubber match right there.
I think it's interesting. I've heard a lot of Amazon shorts out there right now at these levels. Is the action that we're seeing at the stock right now healthy, or are you on board with that?
Well, it depends if you're long or you're short. I think a lot of shorts got caught in that Amazon earnings move. That's why I don't take stock into earnings, because I had short on the brain with Amazon. So what I did is I just took puts. So my risk was premium paid and they went worthless. It happens. But then if you look at the stock now, it actually is hanging in there. So the shorts are kind of trapped. The longer it goes sideways above this earnings gap, and starts to consolidate this big move, and you're going to see these shorts probably get squeezed once again. So at this particular point, I think traders short-term like me will be trading versus this gap. It went green yesterday. You now have this new channel, and if this stock can't fill this gap over I would say the next few sessions, or whenever this market starts to turn up, these shorts that are trapped in here will get squeezed, and then above this 232 you're going to see it move back to the highs. But again, if it starts to trade into this gap and the bulls lose control, then you'll see a little bit more of a volatile trade, and then I would say watch this 210 level, which is this prior peak, which as long as it holds some of this earnings gap, it's positive and the composure is there, but the more it holds, the more pent-up energy the stock will have.
And Baidu gapped down through its trend line and support last month. We saw it pause a little bit. Does it appear to be breaking down again?
I think Baidu is just, on the sidelines right now. The earnings weren't great. They tried to trade it off support. The bounce wasn't very, I would say, compelling, or it wasn't very strong. So to me, I think some guys turned to it yesterday, but if you look here at Baidu, you will see that the stock didn't go green. It didn't have power. It came off the lows, yes, but it's overall very weak. And if you look right here, here's the big gap. That this gap right here has been controlling this stock. It also broke this uptrend, so to speak, right there into the gap. It tried to rally back up after earnings, got rejected right there. So right here, it's a little oversold, but I just think I'm going to avoid it. It's not something that I turned to as a go-to stock recently.
Now, what about Google rallying from the 200-day moving average yesterday? Can the upside continue today there?
I think it's surprising that it's actually defending that area, and that to me that's positive. I came into this year very positive on Google. It's had 2 quarters that the street didn't really love, and as long as it stays above the 200-day, it's in the game for new highs this year at this particular point. I would say guys are looking at it for cash flow. The last time it had an earnings report and it misfired, came all the way into the 200-day, filled the gap here for a nice cash flow, went all the way back up to the prior highs, and then look what happened this quarter. So that's 2 quarters in a row that it's happened, but this time, same pattern. Held the 200-day, a little bit of a rally, came back to the 200-day, and I think yesterday's action was impressive. I would think in order to be really healthy or to get out of trouble, it's got to break this mini trend right here so it gets away from the 200-day, and the way that happens, if it could get above 615 and stay above 615, I think you'll see some leadership there.
And Priceline, of course, reporting earnings tomorrow after the close. What does it really need to push through these levels?
It's got to beat every whisper number out there. This stock has put traders out of business because everyone said that it can't continue, it can't go on. For me, I avoid it just because I don't have a lot of success there. So if you look at Priceline, lately it's been a bit choppy. People are scared to be shorted because obviously earnings are still not out. Let's see what happens after earnings. Recently, a lot of the best companies out there have been reporting earnings, and they've been failing. So I would say, after the earnings, what you want to do is you want to watch this pivot. You have a pivot high here of 772-ish. If it could get above 772 and stay there, it's going to squeeze again. If it can't hold 772, I think guys are going to try and short this one. Or if the number is not great, it's just going to open down. So for me, I'm going to avoid. And if you're a shareholder in Priceline, I would just congratulate yourself. You held on longer than many people that I know, and just be hedged going into that report.
All right, let's do some quick hits here, just rounding out the day. Banks, of course, helped lead the market yesterday off its lows. How do you advise playing a leader in the sector? JP Morgan.
JP Morgan is one that I always turn to on a down day. I want to see if you can go green. If you look real quickly at JP Morgan, I'm not involved. What I'll do is I'll see if it could hold the low from yesterday. The low from yesterday is 41.37. So I'll probably be a buyer looking to see if it holds. If it doesn't, I'll get out of the way, and then this wouldn't be too healthy for the overall market. And
CF Industries was hit after earnings. So how to play now?
Well, now I would just avoid it. This one has been a major, a great stock for us. We've been buying breakouts. I know before I left, I was a buyer around 188, and I sold at 196 just because I don't take stocks into earnings, and I didn't do options because I was not around. If you look here at the chart, you will see, this was the move that I was looking for technically. Thank goodness it happened before earnings, so I actually got to play it. This was the buy. I think I sold it right into here, and now it's right back into support. I think, give it some time. This is best in breed, in my opinion. It's still above the 200. I just think it's an avoid for now. When I see a better chart pattern, I'll bring it to everyone's attention.
And of course, next week we have the big Facebook IPO. LinkedIn will be in the spotlight with that on the way. So what are the key levels to watch with LinkedIn?
I still think LinkedIn has a great future. And I was actually in the Bahamas. I saw the earnings come out. Stock was trading 118.50. Since I don't take stocks into earnings, I had the weekly options. A lot of guys on the virtual trade floor had it also, so that made up for my bad Amazon call. But yesterday was weird. They came in, they sold it pretty quickly. A lot of guys actually thought if it were to trade below the earnings day pivot, it's a short, and they got actually rewarded for it. So once it went below this 115.51, it started to fill the gap. I would say this 107 area is an area that I think would be good to hold for momentum. So for me, I'm not in LinkedIn. I also had to sell my weeklies, so thank goodness I had the weeklies and I didn't hold it. I'll be looking to buy this thing if it could give you some kind of support into this 107, 108. And then ultimately, this area should be a buy, which is your 96 to 99. But if it gets back down here, I think that some of the pent-up momentum in LinkedIn will leave, and it'll just need more time. And
Microsoft is another stock that continued lower after earnings. So what's your strategy there?
I actually tried buying it after earnings because it was putting in a nice flag, and then I got stopped out, which I value and I honor my stops. If you look here, you'll see why. I was playing it right around here thinking if it can go sideways and hold this earnings gap, we could see another move higher, which would be that way. It didn't happen, it went this way, so my stop was 31.81, and rightly so. And watch, if you honor your stops, you save money. That's why you have them there. You have them for a reason. When they trigger, it could piss you off. Oops, bad word. It could upset you, but I think you should be more upset if you didn't get stopped out and you held it all the way down. That means you didn't follow your rules.
Okay, and as we talked about earlier, oil and metals, of course, have been under pressure. Taking a look at the GLD, is this one we should just be avoiding for now?
I think a lot of traders like myself have tried to be long this for it to break its intermediate downtrend, and it just has had no follow-through. There's been little itsy bitsy trades in there, but if you don't take it, you get disappointed. And if you look here at the GLD, it's still in this long-term pattern. It's still very monotonous, not doing much. You still, how many times I'm going to say the word still, have this pattern here where you have a left shoulder, the head, and then this is your right shoulder, which it still hasn't really violated yet. But anytime you add it on strength, you got hurt. And if you take a closer look here, you will see, you have a high, lower high, all the way down here. Looked actually a little bit better, and it was another fake out. So if you're in your macro position, be in macro long versus this. This low here is, what is that, 156.50. And then I guess if it starts to really ignite, and you see how you see a big day like this to the downside, you need to see a day like this to the upside to squeeze some of those shorts and to trade and break this trend, and we haven't seen that yet, and when it happens, I'll try and have it here for you.
Okay, so bottom line, where's your focus heading into trading today?
I'm just looking for cash flow. I'm not looking for a portfolio approach. I got stopped out of the majority of my positions that I was continuing to hold last Thursday-ish. So at this point, I think I'm going to try and look at Apple, some tech, see if they can go positive for cash flow. I'm going to see if some of the banks can go green. But if we close below that 1357, I'm going to get out of the way because I think 1340 is on the horizon and maybe even 1322.
All right, sounds good. Thanks so much, Scott. Happy trading, everyone. Have a great day.